Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is March 14th, 2025, and we're diving into the latest earnings report from PLBY Group, a leading pleasure and leisure lifestyle company. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. PLBY Group has been undergoing significant transformation, and their latest earnings report provides some interesting insights into their progress and future outlook.
Revenue and profitability overview. Let's start with the top line. PLBY Group reported a revenue of $33.5 million for Q4 2024, which is a decrease from the previous year. John, can you elaborate on this?
Certainly, the revenue decline of $5.9 million year over year was primarily due to a one-time accounting adjustment in Q4 2023 related to the termination of a Chinese licensing partner. On a normalized basis, revenue would have been flat. Despite the revenue drop, PLBY Group achieved a gross margin expansion to 60%, up from 51% in Q4 2023, indicating improved operational efficiencies.
And what about profitability?
PLBY Group reported a net loss of $12.5 million for the quarter. However, their adjusted EBITDA, excluding foreign currency losses, was $2.6 million, showing progress in their asset-light model and cost management strategies.
Strategic initiatives and licensing deals. PLBY Group has been active in strategic initiatives, particularly with Byborg. Can you tell us more about these developments?
Absolutely. PLBY Group signed a significant licensing agreement with Byborg, securing $300 million in minimum guaranteed payments over 15 years. This deal, along with a $22.4 million equity investment and $37 million in debt forgiveness, is pivotal for their deleveraging efforts. Additionally, Honey Birdette, which was retained as a core business, generated $6.1 million in cash flow for 2024, contributing positively to the company's financial health.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of $9 for PLBY Group, but the actual EPS came in at 15. What does this mean for the company?
This represents a miss of 0.04 cents against the forecast. While the EPS miss is a concern, it's important to consider the broader context of their strategic transformation. The company is focusing on long-term growth and profitability, and short-term EPS fluctuations are not uncommon during such transitions.
Future outlook and CEO statements. Looking ahead, what can we expect from PLBY Group in 2025?
CEO Ben Cohn has expressed confidence in achieving approximately $120 million in revenue for 2025, with 86% of licensing revenue already secured through contracted minimums. The company is also relaunching Playboy magazine and expanding the Playmate franchise, which are expected to drive new revenue streams. The focus remains on growth and positive cash flow.
It sounds like PLBY Group is setting a strong foundation for the future.
Indeed, their asset-light model and strategic partnerships are positioning them well for sustainable growth.
Key takeaways. To wrap up, PLBY Group is navigating through a transformative phase with a focus on growth and profitability. Despite some short-term challenges, their strategic initiatives and partnerships are promising. Thank you for joining us, John.
Thank you for having me. It's an exciting time for PLBY Group, and I'm looking forward to seeing how they execute their plans.
Thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch for more financial insights. We'd love to hear your thoughts on PLBY Group's performance in the comments below.